get started. So let's talk about the accelerated program, or in your case, the express track, the fluidless.
Yeah.
Can you tell everybody how that was created, what we're looking for on those cases, and how that's supposed to help the agents and how they can get their cases done faster using this process? From your end.
Yeah, I would really say, Diana, we've been looking to streamline the purchase process for the end consumer. The whole idea, from whether it's John Hancock or any other company, is to how do we expedite the process? It's all about streamlining it. What do we need? What don't we need? And what's out there for us to actually utilize, as a proxy to the routine agent amount, more invasive underwriting process. So from our perspective, it's something that we've been working on for at least 5 years, really introducing our express track, which I don't refer to it as fluidless. I refer to it as expedited underwriting, simply because it's a matter of really securing information you need to underwrite an individual and reduce the redundancies in underwriting. So what that really means is that if we are underwriting individuals who are relatively young and they don't have a health condition that requires an additional investigation, how can we expedite that process? Do we really need fluid to actually underwrite that, or can we just rely heavily on the self-disclosure information and move on with that information without impacting the underwriting pricing, meaning you have the ability to risk stratify, whether it's standard, super preferred, the whole gamut out there, and then really be able to do what you do in the traditional underwriting, but in a very faster and expedited manner. So from John Hancock's perspective, we started by using the the ticket process for our expedited underwriting express track, which requires a telephone interview. So they drop a ticket, then there is a telephone interview with health questions. If those are answered appropriately and the searches are fine, then the individual goes through underwriting without really requiring fluids. So that's still something that we offer. It's for individuals up to age 60. Now it's up to 3 million. And for our perm products, actually does allow the ability for us to offer the LTC rider as well. So which is really a very robust offering out there. So we've been looking for use of technology in the whole process. So that's been on our strategy path for a couple of years. How can we actually expedite even that process so that we bring capabilities for e-application, e-signatures, DocuSign, and all that, so that we shorten the process. If there's no need for interview, for example, which takes a long time, sometimes it takes a couple of weeks for the appointment to be set and the interview to be completed. So we actually now are in a position, we are going to introduce an e-application in June to really expedite even that process of securing the Part 2. In the interim, as unfortunate as this COVID and pandemic has been, it's really the silver lining for that has been it has made John Hancock, and I'm sure other companies, to start thinking outside the box. What can I do with what I have, in order to bring capabilities for producers that Diana and others like Diana work with, so they can continue doing business with John Hancock. So if it's not a ticket process, if that telephone interview may not be appropriate for certain population, can we accommodate another form of submission to take advantage of our expedited underwriting? That's why we introduced the opportunity to use paper application, paper Part 1, paper Part 2, still within up to age 60, up to 3 million, to be able to benefit from the expedited underwriting, have straight through without requiring fluids. Now, those two opportunities for us have been really taken off in the last 60 days. We're already seeing the momentum going, which really speaks to the fact that there is a momentum in the industry going for people really wanting to adopt a more efficient way of submitting business, having their business processed for that purpose.
Well, there was also a pandemic that absolutely had to make everybody get in line and start using this process, which a lot of these agents were objecting to or were afraid to use.
Tell me about
everybody's on it.
Absolutely. When we were asked, so what capabilities are you going to bring to the market? We would say, we can be the smartest company, come up with the best capabilities out there, but if we don't have customers who actually adopt and onboard and embrace that technology, there is no need for us to bring that kind of capability. What the pandemic has done, again, the silver lining is that it has basically alerted everyone that we have to change the way we do business. There is an opportunity, and we're starting to see it. I'm sure you're seeing it, your producers are seeing it, all companies are coming up with ways of doing business. And John Hancock is, as always, trying to really be ahead of the curve with the opportunities and capabilities that we're building in. We all heard what happened since March when all the vendors basically were forced to shut down. That really disrupted our industry, right? How do you capture fluids? How do you have the paramedical vendors do their jobs if they can't see the clients? And even if they could see the clients did not want to really, and still don't want to meet with anyone outside their, closer population or society that they deal with. So what has happened is that it has made everyone to think where we have been thinking about, which is, how do I transform the underwriting process, right? How do I do what I need to do to select risk, but not have to rely heavily on all these other elements, which is getting a paramedical vendor there, getting the lab testing done and all that. Can I get that information through other mechanisms to do the same thing?
Can I pause you on that before you go into that? Because you're going to lead down that modified underwriting path, which I want to spend a specific amount of time with. But I want to ask you a couple questions about the express, okay?
Sure.
Or the non-invasive. So a lot of the agents that are on this call right now, they're just been introduced to this program, and they are having their clients do these phone interviews. We all know, you and I know, that it's very important that you prepare your clients for these interviews. Let them know what questions are going to be asked. But a lot of the agents, what I'm hearing, are frustrated because their cases get knocked out of the express, meaning, you're not going to get any medical requirements, and they're not understanding that. And I just want you to be able to talk about what are the specific things that, from a data standpoint, what are you looking for on the express to get the cases through?
Right.
And, when that happens and it does not get accepted and the client is told on the phone they're not getting accepted and that they need to schedule an exam, and then we decide, no, we can go get an EPS. How is that happening?
So the first thing is to do a thorough, I call field underwriting to the extent possible. It's not always possible, but to the extent possible. The second thing is to know what really does not make your client eligible for this process. Individuals who do have medical conditions, particularly significant ones, are going to require additional information. So we don't necessarily capture that with an interview. You do need to look at their health records. You do need to do some more analysis. Therefore, they're the ones who automatically get kicked to, let's call it full underwriting for the purpose of this discussion. But, the process itself doesn't lend itself to complicated scenarios, whether it's a medical scenario, whether it's a financial scenario, ownership design, multi, policy design, and things like that. So the process is, as is designed today, is for individuals who don't have significant health conditions. They come in, they're looking for $2-3 million of coverage for income replacement or whatever the simple purpose is. And basically I call it to some extent vanilla, right? So if you have someone who is living with diabetes, right off the bat, that person requires more information. So it's not going to qualify for expedited underwriting. Sometimes it's a matter of, not having enough information. So you have someone who does a lot of activities, whether it's aviation, scuba diving, and things like that. Because that kind of information doesn't readily come into the process, there is additional information needed or investigation needed. Those are the scenarios, particularly that require additional investigation, and they don't go straight through. The biggest challenge we have as an industry is that when we basically say expedited underwriting is coming up with, if it's not within the identifiable factors why it's been sent to more evaluation investigation, is really understanding how to articulate the reason for it. I always say with expedited underwriting, Diana, there is a trade-off, right? The trade-off is, you want faster, better, you want to have opportunity to qualify for best class, second best class, and you don't want special pricing. You want retail pricing. So you're going to get retail pricing. You're going to get a rate class that's similar to what the traditionally we refer to as full underwriting space, and you want it fast and quick. So what's the trade-off? The trade-off on that is that the offer that you get is the offer that you get on it. There's not much more room for back and forth. However, it does allow itself to some gaps. The gap is, when it goes to for more information, we should be able to determine why. Why was it sent for more information? And that's the area that companies like John Hancock and others are going to spend a lot more time to make sure that information is readily available to really eliminate this back and forth.
So speaking of the information that's readily available, with COVID and what's happened with the courts being shut down and Department of Motor Vehicles being shut down and everything, did we have any problems in getting MVR reports or, getting any of that? That didn't affect any of that information, right, that we were getting?
No, we were pretty good. I can tell you what we're impacted were obviously the paramedical vendors, facilities and technicians to get the blood. Some health record providers, right? So if the doctor's offices were not going to be open, or if they were open, they were going to serve the time to pay attention to the patients rather than having your records released. Those were the main ones that were truly impacted, which led us to coming up with opportunities. So if you can't get blood and urine and have a paramedical vendor go there, what can you do to gain the same kind of protective information for underwriting, at the same time be able to process the business? So those are the opportunities that we have investigated, we have implemented in our process, and it's something that I'm hoping what we have put in place, and it's working now, is it's going to continue to really be the way we do business in the future. We've come a long way in a very short period. Like in the last 70 days, I believe we have really accelerated the transformation and change by at least 2 years. So, and I'm not exaggerating, if not longer, it would have taken us 2 years to get people comfortable with the fact that there is another way of underwriting without giving up mortality and pricing on the risk. How can I do that best? By really the tools that we have been able to introduce into the market to get us to this point.
Okay, so let's take that. You just segued perfectly. The modified underwriting, which pretty much had come about because of the COVID. And like you said, people were having problems with obtaining paramedics, getting paramedics to come out, or people didn't want paramedics to come out. It still is a problem. So, you and some of the other companies made some decisions to make some changes and say, okay, how can we still get the evidence that we need without getting these requirements? And we got to the point where we said we can get medical records. And if the medical records had enough information in them and we were comfortable, then we could make a decision on it. That can be interpreted from here to here, okay, for everybody on this call, just so you know. But the beauty of that is what that enabled us to do was to introduce the one thing that you predicted a year ago, and then we said we would be talking about, which was how we would be obtaining APS records instantaneously within 24 hours. So this expanded, or I'd say modified version of the clients that are coming in saying, we can't get examined, we don't want to get examined, can we use our medical records? What are you looking for in the medical records that have to satisfy you? And then we'll talk about the different platforms that we now have to obtain medical records in 24 to 48 hours.
So Diana, we've always said in underwriting, the gold standard for underwriting is health records. We traditionally refer to it as APS because health records, APS, contain a lot of information that brings insight into the risk. How do we, the health history, you can see whether or not someone is being followed, preventive care, all that. That is really the mean of where underwriting assessment comes from. It's from the health records more than anything else. Of course, for many years, the insurance laboratory testing and EKGs have always added value and they've served us very well. So this conversation does not mean that they are no longer of value. They are, but if some information or the same information is presented to us in a different way, easily accessible, we should be able to use it. So that's why we've been very fortunate at John Hancock. We've had a great relationship with all of our reinsurers. A lot of smart people work at those areas, and they are looking as transforming underwriting and partnering with carriers to work with them. So we've been very fortunate working with them to come up with ways of expedition of underwriting. And this whole idea of modified underwriting was, if we can get health records, APSs, where individuals have seen their doctors, 5 years of records, and they have seen the doctors within the last 12 months, and they have done lab testing. Usually and I'm sure you see that in the health records, when people go see their doctors for the most part, mostly, not everyone, mostly what happens is they get all the values, whether it's the lipids, whether there is an A1C done, kidney function test. They also have CBCs done. So they do a lot more testing in a doctor's office than we would necessarily ask for. They may not have all the elements we get in the insurance lab testing, but you can follow their history. If they've been stability, then you can build your case that I have enough information, I have current biometrics in the APS that I can make underwriting decisions. From my perspective and from our perspective, this is not really just for best class people that don't have conditions. If anything, when individuals do have medical conditions, people who are living with heart disease or cancer or diabetes, their health records is much richer, right? You get a lot more insight and information, and all the appropriate testing associated with their condition is already there. So if I can rely on that to make the underwriting decision and make it work for us, we should be able to make it work. And that's where the whole modified underwriting for us, John Hancock, came about. We can underwrite up to age 65 for $5 million with health records if they're current, and we have good insight into the risk, and the health questionnaires, and of course we run the searches. So it's worked very well. It has full reinsurance support. We're reporting on it on a regular basis, and we are very satisfied with the results. The reason we get excited is because of the results we're seeing in our practice and how we're onboarding these cases using health records. So what does that mean? Go ahead, Diana.
You cut it off at 65, and you just mentioned 5 million. I hope everybody heard that loud and clear. 65, 5 million.
Yeah, at 66 to 70, we're actually offering 3 million. So we know, in general, John Hancock offers coverage from juvenile all the way to age 90. We're going to continue to do that. We took a pause for over age 80 for a little while. Not that we weren't taking business, we were looking at the risk, assessing them, but deferring the finalization to a later date. But that's no longer in place. We're business as usual from John Hancock's perspective. Come in at 6 months old, come in at 89, 90-year-old, we can underwrite you at that point.
But we're still concerned about underlying medical conditions, right? That's not something that's going away.
Yeah, absolutely. And there's always a heightened scrutiny on health conditions, right? People who are living with coronary disease, cancer, respiratory disease, and we are very sensitive to the fact that, COVID itself is impacting individuals who are already compromised one way or another. whether, some kind of health condition. So of course there's additional scrutiny paid on those, making sure that we do the right thing, we underwrite the right way, and we actually protect everyone, the end consumer, ourselves, and the producers in the processing of the business that we do.
So between these, this is perfect. You've now given us up to 5 million. Let's talk about the high net worth platform, which was introduced before all this came about, and how you came to get your reinsurers on board, and what you're looking for exactly on the high net worth cases and why it's been working.
So we really have been working on this whole theory, which is no longer a theory, is really the way to process the business. And it's right now targeted a select population of producers, only because we really want to make sure that we build that kind of relationship and rapport as to how we process this business. Goes back to what we've been saying, is that when you have really substantial health records, and when you know that people have the opportunity to see their doctor on a regular basis, get tested from head to toe on a regular basis, executive physicals, go to Mayo Clinics of the world, or have their own concierge doctors, you get enough information in your inventory to be able to assess the risk without necessarily requiring a more invasive process. What that means is that we introduced a process for underwriting on individuals with, means, or we say high net worth, we're talking about individuals 10 million plus, for up to age 70, where they see the doctor on a regular basis and they have all the information that we need, and we can underwrite them based on their health records. Now, let's say health records come in and they have seen their doctor, we have a lot of information, but we need a piece of information that's not in the health records. What do? We actually say, you know what, you have an option. You can go to see your doctor, get it completed at your own doctor's office, or alternatively, we can send a paramedical then to get it done for you. If you need a UA, the analysis, then we can have it done either at your convenience at your doctor's office, or get someone else to do it. So it's the whole concept of modifying the underwriting process, accessing the medical information you need to assess the risk without compromising mortality. So talk about what the future is. The future of underwriting is having health data that's going to be really a reflective of someone's health profile, so we can actually price that risk appropriately. And with our high net worth, it really is a process that we believe, as we show the results, as we work closely with our own internal folks and our reinsurers, we can all collectively bring a more seamless and more expedited underwriting process to the entire underwriting population, or insurance population, I should say. So we cannot work in a vacuum as an underwriting organization. We do need full support from our reinsurers. We do need full support from distributors. I could be sitting here and coming up with all these fabulous ideas, and if I can't operationalize them, if I can't show results, if I can't partner with you to bring on board the cases that actually qualify and are eligible, then this whole offering will not pan out. Diana, you and I have had a lot of discussions about this. If we want things to get better and the process to become a lot more efficient, we all have to really buy into it, invest in it, partner in it, and make it happen. So
we think that, Total Financial, and based on how we've done business, for all these years, we have a very hands-on approach for the underwriting, and especially with the high net worth cases, and even more so now with exactly what you've said. We have to be open-minded, and we have to present a case to you in the right manner, which is something that we think, that Total Financial does by asking the necessary questions about the requirements that have been done at the doctor's office. So we feel that, like you said, we're partnering with you to give you the right cases and not the wrong cases, so that this program can continue. I really want to hit on, because this is really exciting, all of the time that we've been doing this underwriting, these cases, the agents have gotten really frustrated because APSs have taken up to 3 months to get, if you especially have Kaiser or UCLA out here, wherever. And now we have all of these, at least 5 that I know of, platforms that
Right.
are being used by all the different carriers to obtain records electronically.
Right.
John Hancock is currently using at least 2 programs that I know of. I'd like you to talk about the 2 programs, the difference between the 2 programs, and how they're working concurrently together so that the agents know, because the agents are the ones that have to discuss this and prepare their clients of how this is going to happen.
Of course. We've announced our partnership with Human API and Clareto. Those are the 2 platforms, and Clareto itself has other capabilities, and I'll speak to that. We went into this agreement and partnership with them, with both of them, and working on others, with the understanding that neither one, either alone or together, are the silver bullet for what we're trying to accomplish. They are a piece of a bigger puzzle that we're putting together. So when people ask me, well, if you go with Human API and Patient Portal, the hit rate is low. I'm like, okay, that doesn't matter. You have to start somewhere. So you go with a mindset of where do I start and how do I expand? So Human API or Patient Portal process is really a platform where you engage the end consumer. It's very simple. Most of us have our health records electronically available to us. We have it in our portal. All you have to do is put your ID in there, you get access to it. So all it is that with that kind of accessibility, why can't we actually access Diana Greenberg's health records directly and underwrite them? That's what Human API platform allows and accommodates. They have set up this platform that really allows that kind of access to patient portal information. What it is that it transfers and transports the information directly from one point to another point. So it's a platform.
If the client, you're using Human API, and Human API actually requires an authorization from the client to release the records. Okay. So how does the client know that that's secure?
Okay. First of all, there is tutorial as how that works. It's not, there is an authorization just online. Everything is electronic, right? So they actually, instead of signing a HIPAA, they basically sign into that. They know that the site is secure, and all it is a transport of their data directly to, let's say, John Hancock or Diana Greenberg's portal that comes to us. So we have an agreement. We, as an insurance company, we are obligated to really the privacy and confidentiality of the information. And so they sign into understanding that there is that agreement. The client, the patient has the option of changing their password or credentials right away after they release their records. So there's one access that comes out. It's the information that they already have. The agent would have gotten that information through a paramedical vendor or an APS vendor anyway, by going to the APS or the health facilities. Instead, we go directly to the patient portal and get that information coming in. So from privacy and confidentiality, there is not a compromise. From expedition, it's a win for everyone. Does it always have all the information we need? No, but when it does, it's impactful, it's effective, and it serves the purpose. So even if it addresses 5% of our population, we're 5% ahead of where we were before. That's
so the Human API, and I have it myself, as part of being UCLA. So I know what those look like. You typically get labs. You typically get a summary of the visit. They don't really have EKGs that are included, that are part that you can see. So sometimes there might be some information that is missing that you would normally require, that you would want to see, like especially if somebody had coronary artery disease, you'd obviously want to see the EKG. The difference between Human API and Clareta and the information that you get from Clareta.
Right. So just to go back on your comment on Human API, there are facilities within the portal that actually are connected that you can get information that's more than what, the lab results, and maybe the encounters aren't there, and if they are, how extensive they are. There are times you get 200 pages of records through the patient portal. Not that a lot of them are now repeats, but you get what you need. And at minimum, what you get is directional view. So if you right away, if within 24 hours, you know that your client has coronary disease, has diabetes, and you need more information, at least you know directionally where to go, what to get. So at minimum, that's the benefit. At maximum, it's sufficient enough for you to make a decision based on. So that's patient portal. The main thing to remember with patient portal is that you do have to engage the consumer.
Right.
You have to have their buy-in, they get comfortable, and you have to facilitate that. And the benefit of it is that you can get the information in data format and bring it in and analyze it quickly and give an underwriting decision pretty quick. Clareto
We have access to it as well. So we can order the records in our office and send it to you using the same system.
Absolutely. We've come up with capabilities, whether you come through John Hancock portal or whether you stand up on use the link that you can use yourself. You can download the information, you can shop the case, or you can send a copy to John Hancock if you want to work with John Hancock. So it's all there for you. It's designed to really serve the brokerage market in that way. Clareto is more similar to our traditional retrieval of APSs. Today, agent gets a HIPAA authorization signed, sends it to EMSI or apps or whoever is the APS retrieval vendor. They go out, they wait 6 weeks, 8 weeks, get the records, send them back to the insurance company. So the first part is similar, which is we get the HIPAA. When you get the HIPAA, at least in John Hancock's world, the John Hancock HIPAA, we can upload it into our system, the platform that we have with Clareta, and right away it goes and hits the facilities that Clareto is engaged with. And if the records are there, it will upload it and send it back to us. Sometimes it's same, real time. Perhaps it's 6 hours, and at times 24 hours, depending on the facilities and areas that they are hitting. Now, Clareto's limitation is that they're still only within 19 states. They're active in 19 states. So, so they have a lot more work to do. But what they've done is that they have actually added on, for example, Epic platform on their platform, and they've got another one on their platform where it gives John Hancock as a company, for example, the opportunity to really figure out if Diana Greenberg is coming to John Hancock, can I go to all these 3 platforms and see where her records are and bring them into our environment? It's not a solution for every client, it's not a solution for every submission, but it is a solution for a percentage of our clients today and more in the future. Diana, can I ask you a question? Let me ask you this question. When RX was introduced, databases, prescription checks were introduced initially. Do you know what the hit rate was at the time, a few years back, like you would go and...
Actually, it wasn't very much. We weren't getting hits. The information wasn't there, which I believe was an issue.
Right. So started
right?
I think, yeah, absolutely. It was like less than 20%. And everybody's like, oh, I'm going to spend the money. It's only 18% hit rate. What's the value? But people said, well, let's start. Let's see where it goes. Because over time, as they expanded, the wealth of information came into underwriting. And now I can tell you, insurance companies are now addicted to prescription. Everything has a prescription check. Why? Because the hit rate is now 80%. The reason I bring that up, Diana, is because that's the way we look at these EHR platforms. They may be in their infancies, but if we don't start, we won't get to where we want to get to. We cannot
evolve.
They have to evolve, and we have to help them evolve. You have to help them. We have to help them as the manufacturer, and then we can work together to make sure that they bring us the capabilities we need to help you, help your producers, and help the manufacturing companies.
Okay, so to summarize, you're using the two platforms. Are you using the two platforms concurrently?
If we need to, we can use it concurrently. You know, again, remember, Clareto is limited to 18
Limited,
states, right?
Okay,
So it requires a HIPAA authorization for Clareta. Patient portal doesn't. But you know, there are producers who are really good at saying, let's start the patient portal, and I'm going to get a regular HIPAA signed as well. I can use them both. Now, what we've done in the process of working with Clareto, aside from really setting the platform for John Hancock and using our platform, is we're standing up a relationship between, for example, Clareto and BGAs directly so that they have that capability. Why are we doing that? Because it's helpful to you to get access to the information. It's helpful for you to have access to the data. And we want the data. We don't want the PDFs. We want you to send us the data so we can accelerate our underwriting evaluation.
And actually, people can download their data and send that in too, correct?
On Clareto,
No.
it's a little.
If I had a case and someone does have, you know, the portal system, and they want to download their records and submit those records, we will look at that, right?
Yes, yes. It's the same as submitting health records or APS. And when I say that, people roll their eyes. They say it's not the same as APS. I'm saying, you know what? I understand it's not like to like, but it will serve a purpose when there is enough information. So let's just refer to it as health records and get everyone comfortable with that.
Okay, so everybody on this call, if you haven't spoken to your doctors, make sure you tell your doctors that they better get on the system because they need to catch up with the times so that these records are available. Thank you for talking about that because we, you know, have recently engaged and Total Financial has signed up with both programs. So we are now able to use both programs and we will be, you know, as we normally do, talking to our producers and saying, hey, you got to make sure and check with your client right up front if these are available. So we're hoping that that will be very successful. So now let's talk about one of my favorite topics. You know, John Hancock has done some pretty amazing things and come out with some very different platforms, products. Vitality came out a number of years ago. Actually, I can't even say a few years ago. It's more than that now. And now, last year, we came out with Aspire. And Aspire is a program that's specifically focused on people that are living with diabetes. I'm not sure if everybody knows this on the call, but John Hancock is actually one of the first companies that started issuing clients who were living with diabetes. And in fact, I even have it written down the statistics of how many policies John Hancock has written on diabetics. This program is much like Vitality, except for we are now offering education and benefits to people living with diabetes. In this time, in this environment, where companies are denying people because they have diabetes as an underlying condition, or maybe not giving them, you know, the best class possibly considered. How can an agent use Aspire to market and sell and talk to their clients? What was your focus in using this and helping clients and an agent and selling it?
Right. Absolutely. You know, I'm, of course, a big supporter of Vitality and the concept. And really, I do think its use come into play mostly for individuals who are living with a chronic condition. Because the athletes of the world, the people who work out and eat well and all that is great. The offering is there and we're helping them any way possible. The biggest help comes to individuals who are living with chronic conditions. So we know, we consider diabetes a pandemic, epidemic, I should say. And I know, sorry, in the US. So there's a large population of people who are living with type 2 diabetes and type 1 also, good sized population out there. So the question is, you know, could they benefit from number one, Vitality, engagement with Vitality? And absolutely, because what the offering does is really promote good living, promote seeing your doctor on a regular basis, preventive care. How do I eat better? How do I exercise? How do I improve my condition as is? And diabetes, particularly type 2, is one that you can actually modify, right? Modify, improve, and actually progress to a point where you are living healthy, and you can see the improvements through taking care of yourself, regular, view of your control of your diabetes, make sure you don't develop coronary disease to the extent that you can control it and things like that. So that's the Vitality itself. If anything, Vitality is the most valuable program and platform for individuals with conditions. Now we're talking about Aspire, and why is it that we still, during pandemic, we're so high on that? We are looking at data that basically says, you could be living with diabetes and have great control. You're doing everything right. But you could also have individuals who are living with diabetes who are now controlling the disease well. So we want to make sure that, number one, we continue offering insurance to people who are living with diabetes. And why are we not worried about that is because, number one, we will do everything possible to do the best risk selection in the underwriting process. Second, we count a lot on their engagement in the Vitality. And we say, if you do take care of yourself and take your medication and all that, you do much better. People who take care of themselves and go through education, who are living with diabetes, will bode much better in light of what's happening with COVID than the people who are living with diabetes and don't take care of themselves. So the two camps, right? You have people who are already not good controlled, so they are more exposed to COVID. So what can we do to help them to minimize and mitigate their exposure to the side effects of COVID? Even if they acquire it, can they survive it? Can they get better? Can they recover? Of course, if they live, you have to build your immunity and your control and tolerance. And this Aspire actually is a platform that teaches individuals to how to better take care of their condition. It's self-educating to some extent. It promotes regulation of the condition. So if anything, being part of the Vitality and Aspire platform is going to help us mitigate undue exposure as a result of COVID. The better control, the less likelihood to be significantly impacted. That's the way we're looking at it. Does that
We're not saying no to diabetics,
No.
right?
No.
And in fact, this program, yeah, we're underwriting them. And in fact, this program can actually help them, especially if you do have somebody, which comes across my desk quite often, who, maybe doesn't have typical control. I just want to clarify one thing. Can it be used for type 1 or is it just for type 2?
The Aspire is not, there are features of it that are not yet in place for type 1, but the whole concept of Vitality and healthy living and everything else is applicable to type 1. I think there's a misunderstanding because the type 1 profile is definitely different than type 2. So the program has to be different. The offerings have to be different. The reaction is different. The whole profile of type 1 and type 2 are different. There are features of it that are applicable for type 1, but there's one or two, and I'm sure I can get you all the details. But this is offering for all people who are living with diabetes from our perspective.
Okay, great. And it is a benefit. So it's totally separate from what we do on an underwriting basis to assess risk. I consider that a benefit for the client. It's a program that will benefit them.
Exactly. So we don't do anything with Aspire or Vitality at the time of underwriting. It's one of those, engagements that is a benefit that comes with the policy that we issue. But we are very strong in underwriting people who are living with diabetes. As you mentioned, Diana, we've been doing this for many, many years. And, we still continue to insure people who are living with diabetes, whether type 1 or type 2. If they're insurable and we can assume the risk, then we will.
Okay. I really like this question that popped up. I don't know if you can see this question. This is a really good one. I was going to hit on this. Looking forward, you kind of touched on this just a little bit about where we're going to be in the future. And we both agree that hopefully we can maintain what we're doing right now and that this stands the test of time. And we're hoping that we don't have to revert and go back to obtaining the medical requirements for age and amount. You and I have also discussed how the class definition may change. There may no longer be a super preferred and a preferred criteria when assessing a case. It's just going to basically, in my opinion, kind of go back to where we were, like looking at it holistically. But do you think that with all of this change, that this is going to change the rates and or your cost pricing perhaps in the future?
I think this is something that everyone is looking at, actuaries and underwriting shops and the R&D folks within organizations are looking at it. We are at a point, this is the accelerated disruption we've been talking about. What's the definition of full underwriting? What's the definition of age and amount requirements? We're also programmed to have a routine age and amount requirements that applies across the board to everyone, right? Permanent lab EKG, no matter what you look like, those are the minimums, and then you add on everything else to it. So it's all about redefining routine age and amount requirements, redefining full underwriting. When people say, oh, now it's being sent to full underwriting, we argue with them and say, well, even the express track is full underwriting. It's full underwriting for the person who doesn't need additional information, right? So the definition of full underwriting is now changed. It's underwriting. Let's just get rid of the word full underwriting. What does underwriting mean? And then rate classes. How do we define criteria for preferred, super preferred? Because we got our cheat sheets, right? Everybody check mark. Well, those are going to, yeah. But you get ready to throw them away, Diana. You have to, because if modified, really, exactly. If modified underwriting, meaning you rely on the data that you get from alternative sources, is the way that we are heading, and that's the way people want to go, to expedite the process, what's there to come up with a routine requirement or say qualification that you ask for? So let's get our head around the fact that how am I going to define a preferred? Let's not even use that label on individuals. If I had a ball,
crystal ball. Go ahead. That's one of my comments.
If I had a crystal ball, I would say in the next 3 to 5 years, I as an underwriter could be sitting here and underwriting Diana directly by asking questions, accessing that data in real time, getting whatever I need, be able to process it as quickly as I can, and offer you a price.
A price.
A price, not a rating, a price. So is that possible? Absolutely. Is that going to be painful? Absolutely, because we have to make sure we price the risk appropriately, the product is appropriately priced, and it may not be that much different from product pricing than it is today, but we all have to learn how to actually calculate our experience based on new data sources that we are using to underwrite.
You answered that perfectly. And I'm no actuary, nor do I create product. But my guess is that coming down the line will be a repricing. And this whole class and pricing will be changing. Yeah, you heard it here. And as I said before, when I introduced, I consider you my visionary. And everything you said so far has come true. So be prepared, everybody, because that might happen.
But we need all of you to actually embrace the change and be on board, because the hardest part will be for us to really engage with our distributors, make sure that we are transparent, we explain, and we show the benefits of change.
Susan, it is always a pleasure talking to you. I will be on this call for at least another hour more, talking about a lot more things. And I'm sure you and I will have a lot more time. It is my absolute honor to be able to work with John Hancock and you. And thank you for giving us this exclusive interview. And Scott, I'm just going to let you clean up and, have some closing statements for everybody.
Before that, can I just thank you, Diana and Scott, for really reaching out, setting up this hour for us to have a conversation. I do appreciate everything that Total Financial does as great partners for John Hancock, and I appreciate your partnership. Thank you for having me on this call.
Thank you.
We can't hear Scott.
We can't hear you, Scott, but you look good.
Hey, there we go.
Okay, good.
Hey, I had a couple of quick questions that you could answer quickly. Susan, can you go over the ages and the breakdowns for medical records again? You just quickly cover that.
Yes. So up to age 65, up to 5 million, 66 to 70, 3 million. Does that help?
Yep.
Okay.
That's perfect.
So that's different than Express Track. So Express Track is up to age 60, up to 3 million.
Okay, perfect. Does Epic Medical Record System work with your Human API, or is that one you do not know?
Epic is on the Clareto platform.
Okay.
Cool, because I didn't even know what that was.
Yes.
And then I think you just answered that one. We have another question. What is the name of the database that healthcare physicians would need to access that is fairly more modern? Is that Clareto?
So I'm not sure I understand that question. Physicians, there is this platform that they get on. Most facilities are either engaged with Epic or Cerner, and those are the technology platforms that facilitate the transfer of that records among health facilities. Mm-hmm. So all doctors who are associated with these hospitals and facilities are probably on the platform. Epic has its own chart gate, what they call chart gateway, which is a new thing they introduced to allow non-health space entities to get access to them. So you could technically have a direct contract with Epic through their chart gateway to get access to those health information.
Okay. Then I have one final question.
Okay.
And this is more of a crystal ball question for our good friend Igor. What do you see coming in the future for your clients over 70, 71? What kind of talk a little bit about that?
So again, from our perspective, the bulk of the information comes from health records. That's great. One of the things that really is significant for older ages is really for us the ability to measure their cognition and their mobility, for example. Are they, can they walk straight? Is there a gait problem with them or not? And the reason we emphasize on that, for example, John Hancock as the mature age supplement that really measures all that, is that kind of information does not readily make itself available in the health record. If there are information about someone's cognition or mobility and things like that, then we can specifically rely on that information. There are ways to get at that, and we are looking at opportunities to see whether or not there are other sources we can rely on so that we could expedite the older ages as well. But the bulk of information comes from health records. We have to solve for those couple of things that we don't necessarily and readily get them through health records.
So to clarify that for all these people, we are normally asking for the older age assessment of some sort, right?
Right.
For these older ages. And many of these people might not necessarily have that testing in their APS records.
Correct.
So I'm sure that this is something that's going to have to be evolved, because we can't just keep telling people, go get, a mini mental test and, we'll accept that. So to be continued on that one.
I think the way to look at that is, and one of the opportunities we're looking at is telemedicine, which is really showed itself to be very, very impactful during the COVID, right?
Yes.
You can call up your doctor and you can have a self-evaluation or evaluation by your doctor. You could easily consider, can I do a cognition test face-to-face? Can I just get up and go and be measured and gaits and all that? And I believe with technology that's coming, that's the way to look at it. what kind of technology can give me and transmit information about my gait, my stability, and things like that without me having to be physically seen. So if I had a crystal ball, I would say that's the direction we would be going.
So, we'll be having these Zoom conversations with clients, and that'll be great because we'll actually get to see the clients and make those decisions. Y'all can look forward to that. Okay, Scott, why don't you wrap it up?
Perfect. Oh, Zoom calls. I'm just got to get them on there. Love technology. So I want to say a huge thank you to Susan and Diana. I got a lot of compliments, a lot of texts, a lot of things going on during this call, already doing compliments. So the information that you presented was unbelievable. I truly believe that our partnership with John Hancock and Total Financial puts Total on the cutting edge of what's going on in the marketplace. And I think there's so many things that are going on that you need to, as an agent, make sure that you're calling into us. You're understanding what Human API is, how you can use it in your practice. So what I would ask you to do is, give us a buzz and talk about Human API and talk to your underwriter about it. Everyone knows our phone number. It's 1-800-989-7500. Don't forget, you can also go to our website. There's still a lot of pertinent information on our COVID tab that we keep updated on a daily basis. So make sure you're going up there for updated information as well. So with that, just a huge thank you to everyone, and a huge thank you to Susan and Diana. And we look forward to working with everyone very closely on your next case. Thanks, everyone.
Thank you,
Thank you.
Scott, Diana.